This one stock can change early buyers' lives. I'm not a financial advisor, but it seems like financial advisors with my research might say to buy as much as possible before November 29th. This company, Intuitive Surgical, had 20% growth in revenue, $2.5 billion of revenue. That's year-over-year growth that's significant. Anything over 10% is significant. They're in a growing field and a hot field, which is AI-assisted robotics. So instead of waiting on Tesla's humanoid potential, which could come in 5 years, could come in 10, could actually be in the home in mass scale in 15 years, this company is in a sector that is evergreen, healthcare, and AI is actually making a difference in very specific, literally restricted form factors of surgical arms that don't have to look like a humanoid. So this company is set up for a big move. It just had earnings and it's got a higher low. We'll look at the chart in just a moment. But right now, it looks like it's very early in its journey to becoming potentially the next Johnson & Johnson, which would be at least a 3x. If you look at other companies that are setting up right now that look similar, there's one that is similar to Tesla as well. The company is Rivian, and Rivian had 10 to 15,000 deliveries, and an even more impressive 80% year-over-year revenue growth. So this is not a video to hate on Tesla. Tesla's actually looking pretty solid right now. It just needs a little bit of a sideways couple of days maybe, and then could get a move back up to basically where it was a month ago. These two stocks look like they're already showing signs of life though, and that's why we're looking at the surgery stock and this also stock that I believe to be early based on the current market cap of Tesla, Rivian, the electric vehicle stock. This is not financial advice, but let's jump into a little breakdown.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
Okay, so here's Intuitive Surgical's earnings beat. $2.5 billion of revenue, up 20% year over year. Earnings per share beat analyst expectations. And they've actually had more use of their products. So in an app, that would be like more downloads or more time spent in the app. And then in the real world, in healthcare, it's procedure volume rising. So more robotic assisted procedures, 20% more. And this is their main system that has driven that growth. So that's solid. That's what you want to hear. They did get FDA clearance for a new update of AI-driven navigation and imaging for a very specific procedure, lung biopsies. So that's exciting. That's going to expand and start in the next year. They have a variety of different platforms, all sort of very focused on specific procedures. So this has nothing to do with humanoid form factors or anything like that, even though that's sort of all the videos you see online, right? All these big robots. So they did have share buybacks, which is always a good sign. That's something a big company like Apple would do. And sure, there are risk factors. I wouldn't look too much into like price to earnings or any sort of similar ways to value a company. Over the long term, of course, that's what you want to do if you were to buy this company. But we're not buying it, right? The idea is just to take a little piece and see right now hospitals tend to be paying for it. And yeah, okay, there was a slight downturn, but not really. I mean, if we look at the actual chart instead of ChatGPT, this thing held up. Sure, it started to go and it sold off, but this is about as good as an earnings reaction as I've seen in Q3. Like maybe GM is slightly better. I mean, it looks pretty similar. But there's really no comparison. Google, I guess, is also having an awesome earnings reaction as well. It took a while, but big move up after that talk of Gemini performing better than ChatGPT, or on par at least. So Apple up there as well. Okay. Taking a while, but getting there. This company, of course, not really in the conversation with Google or Apple. Intuitive Surgical is more often considered to be a healthcare stock, right? So XLV is doing awesome. All of the healthcare adjacent stocks are doing awesome. Pharmaceuticals, big move up. Biotech, which is riskier, but big move up on the ETF. I'm just saying I'm not really excited about recent biotech names just because there have been drops like in Unicure and in Intella Therapeutics, which has been pretty significant. I almost wrote NTRA, which has done excellent, but that is sort of a unicorn move right now, 6 days in a row. So we're looking for stocks that haven't gone up. And sure, I could say TVTX is interesting, NAMS is interesting in biotech, but you do take the risks that I just showed of those biotech stocks that cratered on FDA, control group confusion, and then patient with side effects. So for that reason, I think a robot-assisted surgery stock is a little bit safer. It's not a drug. It's unlikely to have a huge drop based on something like that. And it's at a really favorable level, breakout level as well. So higher low, it almost is reminiscent of, on a slower scale of a little wolf move that we recently saw, higher low here, and then we've had a big move up here. This, of course, is in a completely different sector. This is a Bitcoin miner transitioning into an AI data center compute provider for hyperscalers. So translation, they actually do the GPU computations for Meta. But I think ISRG is safer than some of these other companies. On a 5-year chart, this is not, it's not bad, right? I mean, it has the 2022 dip like all the companies, all the big companies. It has the tariff dip like all the big companies. And it was a little late to bounce up. This year has actually been pretty ugly, right? Yeah, there's a lot of healthcare did this in the second half. I mean, if we look at Eli Lilly, only recently had this massive run. It was all the way up until, I don't know, September that pretty much went sideways when it's hard to say. I mean, I guess you could say this is the April low, right? So it definitely took a while to start going up, but it's possible that it's not really wise to compare these big companies to the market at all. I mean, look at the energy companies did the same thing. They just went sideways for most of the year. So with all that said, this is the stock. That's probably more charts than you can handle or than I can handle. But I think the chart really tells a story. I mean, we can talk about sort of speculation on the growth of robotic assistant medical device surgery, but I think the application is pretty obvious if it can reduce errors. And there's these massive companies that are already pushing into this field as well. Medtronic is really well known. And then Stryker, also well known for orthopedics. So joint replacement, these are multi-billion-dollar industries without a doubt. So we'll see what happens long term. In the short term, I think there's definitely a little breakout opportunity here. And this company does have Johnson & Johnson among its peers. And if we just look at the growth story, this is 150 million market cap. If we look at J&J, that's like a 400 million or something market cap. So there's definitely a growth opportunity. 3x is definitely possible, which is pretty impressive for public markets. And this is an international company with the developed nations, of course, being where it's implemented first, but this isn't a humanoid play. That's important to mention because everyone's been talking about humanoids. People have been talking about remote operated humanoids too. And ISRG is remote surgery is looked on way more favorably than a remote operated surgery than a remote operated humanoid. Sorry, I was just looking at a comment on the live about DLO. Someone is just obsessed with this DLO. I don't know what to say about DLO. It looks like it's not doing so hot, to be honest. Sorry. But I mean, a lot of companies look like this. They went down in the last month since this one interestingly had a jump on 1010, but it's hard to get super excited about real estate or some of these other sectors, which has just gone sideways. Energy, as I mentioned, went down recently. Really, the reason I'm looking at healthcare is doing awesome. So that could change. This could be a lagging indicator, but we're definitely at a really important breakout spot. So that's ISRG. That's plenty about ISRG. And then Rivian, I do want to give another idea just because you might say, I don't invest in healthcare, which is fine, given the recent drops that I showed. These are biotech companies, so it's a little different, but I don't blame you. So Rivian, kind of shaping up as well. This one over the last 5 years has been not so exciting, right? I mean, just since 2023, this company has basically done nothing, but there has been some momentum opportunities. So if we look, there are little bursts, and that might be not interesting to you as an investor. But if we look at, say, August to September, the end of September, September was a huge monthly SPY, and Rivian went up 30%. So sure, there was this pullback, but even if you just caught, this sort of flag, which maybe you did, maybe you didn't, you can get 10% of that, which you might think is a joke, but the liquidity is 40 million times $10 a share is, $500 million a day. So you can plop $4 million in here and get 10% on that, make 400K in a week. I don't think that's a joke. So here's the opportunity right now as I see it. It's sort of at this line right here after the recent earnings. This is a loss, so it's not great. But if we look at the actual performance, revenue jumped 80% year over year to over $1.5 billion. So they did have consolidated gross profit. This has a couple of qualifiers. Gross profit is not a profit, but they did have some revenue from software and services. They have this venture with Volkswagen, and I'm pretty sure software and services refers to licensing to Volkswagen. So this is their loss. They didn't have quite as big a delivery number guidance as before, but you know what? That 80% revenue result is pretty impressive. $1.5 billion definitely is no joke. And if we look at basically who they're compared to, well, this is the crowd. Okay, Tesla and Lucid. Lucid is very different in terms of share price behavior. Rivian had 50,000 vehicles last year. Tesla almost 2 million. So not really in the same conversation. Okay. But they each have their strengths. So they basically are doing the high end thing. They're trying to start the way Tesla started, actually. And we'll see what happens. But you don't really have to bet against Tesla to bet on Rivian. This is a short-term play. And Lucid, I'm not even mentioning much about Lucid because they're very small. They're very small. So if we look at their stock price, this is maybe why it's not that interesting. I mean, do you want to bet on this company right now? I'm sure they'll do well in the long term, maybe. But it doesn't look that interesting right now. So we'll see. Long term, this is basically the play. The $50,000 vehicle trying to get to 200,000 vehicles a year, which will be pretty interesting compared to Tesla's 1.8 million. new plant in the U.S., which the Trump administration is going to like. And we'll see what happens. But long term, they're definitely in the conversation with Tesla, which is a crazy thing to say. You definitely see them. I mean, I see them around Rivian cars. And they're not, the subject of any sort of documentary, which a certain unnamed electric vehicle company has been. So I think it's pretty much all you can say about Rivian. Here's the level right here, 15 and 20, looking for a move up to 18. That's the idea. If you like these ideas, hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe. If you want one-on-one help, head over to stocksforme.com and take advantage of that Cyber Monday deal.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.